What is up, my Forex for Beginners family? Okay, today we're talking about time frames. Okay, so here we're looking at the AUD USD Aussie versus US dollar. I removed, if you have any moving averages, just hide them for now. So what I want you to do is just close all these. First, just watch this video, but then after, like every lesson, I want you to watch it again and practice duplicating it on your own TradingView chart. Each one of these lessons is a tool that I need you to be familiar with. And so whenever you see something on the chart, all these things, all these lessons you've learned are just going to come naturally, and you're going to mark up the charts. So right now I have everything hidden. I just want to look at the candlesticks, and we're going to talk about time frames in this lesson. Okay, so right now we are on the monthly time frame, and all I'm going to do is just all I did was draw a trend line. Okay, I'm just going to delete this and do it with you guys again. So what I want you guys to do is just draw a trend line. Let's make it a strong red color, because this is representing this trend line right here. This trend line is representing the monthly trend. So what the advantage of time frame is the higher the time frame you're on. So if right now I'm on the monthly time frame, so each one of these bars represents a 1 month of price movement. So 1 month, that's a lot of data. So this candle means a lot. This is the higher time frame is where candlestick analysis becomes really important. But we'll talk about that later. But right now, this trend line is extremely important. Why? Because we're on the monthly time frame, and the higher the time frame, the stronger the resistance or support is stronger on the higher time frame. Because why? Because each candle is 1 month of data. Right now, see how right now we're on the monthly time frame, and I drew this trend line right here. Let me just adjust it slightly. So what I did is I wanted to make sure this point was touching the line and this point was touching the line, and that's about good. We'll just leave it there for now. So this trend line is very important because each candle is worth a month. So this trend line starts, say, about here, and if we look down here, the date is December 2010. So from 2010 all the way to let's see here, September 2019. So that's from 09 to that's 9 years. So for a long time we have been in actually 10 years. We have been in a downtrend. So this is why the higher the time frame, the more important each when price comes to this level again, we know that, hey, because we're on the monthly time frame, this is a very important level. And the higher the time frame areas, that say if we sold here, because it's the monthly time frame, our profit is so much greater on the higher time frames opposed to the smaller time frames. But anyways, just make a note of that, and we're going to continue here. Okay, so we got our monthly time frame. So just make a note, because we're the monthly, since we've been in a downtrend for the long time, the saying the trend is our friend. That means we should trade in the same direction as the overall trend. And on the monthly, the overall trend is down. I usually don't use the monthly as the overall trend. Is usually the weekly, but the weekly usually is in line with the monthly, because the monthly, the data is older, so it takes longer to appear opposed to the shorter time frames. But right now, just remember, on the monthly we're on a downtrend. So let's go to the weekly chart. So now each one of these bars, because I changed the time frame, now we're on the weekly time frame. So each one of these bars represents 1 week of data. So if we just look, you know, let me just label this. So this is, just label this as a lower high. And we all know what a lower high is, right? That's what market structure is: lower high, lower low. So I'm just going to copy this and paste it. And I want you to do this on your charts as well, because when you write these notations, that's when your brain starts to really like picture it. And that's when it's easy for you to, you know, see it on the charts without marking it up. You can mark it up later, but you want to be able to see what's happening when you're looking at a blank chart and marking up the charts. And why I keep telling you guys to look into the past, right? So I want you to go through all these time frames, the main ones, the monthly, weekly, the daily, the 4 hour. Those are the standard ones. I use various time frames, and we can talk about that later. But just notice that since we're making, right now we're on the weekly, since we're making lower highs and lower lows, we're obviously still in a downtrend. The definition of a downtrend is making lower lows and lower highs, lower lows, lower highs. So on the weekly, we are still in a downtrend. So say if we're trading off the weekly chart, again, what did I say? The trend is our friend. So since on this red line here, the monthly, since the monthly is in a downtrend, and the weekly we have identified is in a downtrend because it's making lower lows, lower highs, lower lows, we should only look for sell opportunities, right? We could have sold here, we could have sold here, we could have sold here. But what we don't want to do is, and you can do this, but right now I want you to trade with the trend. But right here, see how on the weekly there is uptrends. This is another large uptrend. These are counter trend trades. So this is actually trading the opposite direction of the trend, because we know that the monthly has shown us that we're in a downtrend. We can see that the weekly has shown us that by showing a lower high, lower low, lower high, lower low, the weekly is also in a downtrend. And here's why I'll show you why we use moving averages. Instead of, you know, I want you to still learn how I identified that the weekly is still in a downtrend, right? Because this is market structure. This is showing me that we're in a downtrend. But let me add the moving averages. So you guys should have on your chart the EMA 8 and the EMA 18. So let's see what the EMA 8 and 18 is telling us. So here we see the EMA is crossing, and after that a downtrend continued. So do you see that we are on this line is showing us that the monthly is in a downtrend. The weekly is showing us it's making a lower high, lower low, lower high, lower low. Also the EMA is now, see how the EMA crossed and the red is above? Yes, that's correct. So when the red is above, that means the trend is when the blue and the red cross and the red is above, that means a downtrend is beginning. So this is where we would possibly take a sell trade. Because why? Because the monthly is showing we're in a downtrend. The weekly is also showing we're in a downtrend. So what do? We start looking for sell opportunities in the downtrend. And this is how we use the EMAs. The EMA 8 and 18, they crossed, and look, a downtrend happened. And this is where we should have sold. We could have sold here and closed our trade down here. And that's what you call trading with the trend. So this is why I keep telling all you guys to look back into the past. You know, right now we're looking on the weekly time frame, but Even though you're learning all this stuff on the monthly, weekly, daily time frame, which I'm teaching you, and one of my students asked me, well, is this swing trading? Well, we look for opportunities usually on the daily, and I've been telling you guys, look at the 4-hour chart. So look for structure on the 4-hour chart. But everything I'm teaching you right now is applicable to every time frame. It doesn't change whether you're looking at the monthly, weekly, or daily chart. You analyze the charts exactly the same, whether you're on the monthly, weekly, or 4-hour or daily chart or 30-minute chart. You want to be trading with the trend and looking for reasons to buy and sell. And the higher the time frame, the stronger this area is of resistance. Why? Because if you go back in time over a longer period of time, these levels have held the longest. So this is why trading the higher time frame is better. When you go to the lower time frame, let me just hit reset on our chart. See, you have all this choppiness. You have all this, the lower time frame is harder to trade because you have all this choppiness. And when you're a beginner trader and you have limited funds, you need to have better entries. You need to take the higher probability trades. And this is how, when you trade the lower time frame, look how much randomness there is in price. And this is where, maybe you thought, you needed to sell here. So you placed a sell right here, but then price came down to here and skyrocketed back up and it hits your stop loss. And now you're out of the trade and you're frustrated. You're like, oh, I thought I knew what I was doing. I went to sell here and price jumped up and hit my stop loss. Well, that's because, my friend, you're trading on the 15-minute chart. We don't want to be trading the 15-minute chart. We can look at the 15 and 30-minute chart, and I do that. I look at the 30-minute chart when I'm in a trade. Say if I decided to sell here based on my higher time frame analysis, I would come to the lower time frame and just make sure that structure is being followed. Look, it's making a lower low, lower high, lower low, lower high. You come down to every time frame, or I come down to the lower time frame when you're in a trade. And I'm going to come back and show you guys how to use the lower time frame. But look right here. See the stuff I was showing you on the lower time frame? That was right there. Do you see the randomness? Remember the randomness I just showed you? That happened looking at the 15-minute time frame. We don't want to base our analysis on lower time frame. We want to base our analysis on the higher time frame, and that's why the next point I want to bring across is, so I want you to study the higher time frames and help you analyze where the trend is going. Let me jump to, say, a lower time frame. So say you now, by using the monthly and weekly and daily time frame, you have an idea of which direction the trend is going, right? So you now know we're in a downtrend. I'm going to look for sell opportunities, and that's when we can add in support and resistance. We can add in, more EMAs. Just continue your chart analysis, but the whole point of the time frame is to use the higher time frame to understand where we are in the current price. So the current price is actually right here, but where are we in the overall picture? Previous to this downtrend, we were actually in an uptrend for a while, and then we hit this monthly level, monthly level, and we started our downtrend again. So that's why I want you to look at the higher time frames, mark them up, mark the charts up like I just did, and really identify where we are in the current trend. And right now, we're kind of wondering, are we going to bounce back up and possibly come up here, or are we going to continue down to this level here. So this is what and I'm figuring all this out by, right now I'm on the daily chart. So do you see how, you know, I identified all this information by using the monthly and weekly time frame, and now I'm on the daily time frame, and through the daily I've identified that this is possibly the next target, and we actually, this right here, this is a lower low. Let me copy that, paste. We actually just made, I believe, another lower low. So this is how you just keep adding to your chart. See right here, yeah, so look, we did make a new lower low. And I'm just gonna go back to that 15-minute chart, reset. I just wanna erase all this nonsense. See how the randomness on the 15-minute chart, which was like a little speck on our higher time frame chart. And same thing here, just whatever time frame you're on, just look, when this EMA crosses, look, the trend changes. But like I said, right now we're on the 15-minute chart. We don't want to base our analysis on lower time frame charts because they're full of randomness. So see those lines that I just deleted? That was the randomness, and look, it's just a small speck of where we are at. And just here now, I haven't even analyzed this yet, but just breaking it down with you guys, this is why I love chart analysis, because I find it so fascinating. Look, just by drawing this was the bottom here. You can see, look, price came, hit once, hit twice, so made a double bottom there, jumped up, came up to here, topped out, and then the EMAs crossed, and we crashed down below this level that was previous support, and now we're in a new zone. This is the new zone right here. We're gonna play in this area, and I don't know about you, but I'm gonna be analyzing it and looking for, you know, sell opportunities. If it's in this area, I'll be looking for sells. If it's in this area, you know, this would be counter trend if I bought in this area, but maybe I'll wait for it to come and hit this line and get sent down, right? So there's so many, you know, what could happen next? We could, you know, continue that down that way, or we could come back up, you know, maybe it'll pull back, retest this level, and then pop up. These are all the possibilities, and I want you guys to just do this lesson again, just duplicate it on your chart. I'm telling you, once this just sinks in, it becomes really fun, and that's why I love sharing this with you guys, because I just find it so darn fascinating. And again, I'll remind you, why does all this happen? It's because there's millions and millions of Forex or Bitcoin or whatever you're trading, gold. There's millions of traders just like you and me doing chart analysis the same way. And don't get me wrong, the true market pushers are the banks. The banks, you know, they're the ones that see how price came up here, and here. This is the banks. They're just buying and selling, and then they push. They're the one that banks push the major direction, the major holders of the currency. They push the direction based on economic situations, whatever. We don't care. All we do is join the trend. After the banks push the trend in the direction that it's moving, us traders, all of us, that's when we get interested. We like when the market is just flowing, because then all of us, millions of traders all over the world, we just continue doing chart analysis the same way, and we make tons of money. Thanks for watching. I hope you enjoyed this lesson as much as I enjoyed giving it to you. I can't wait to see you on the next one. Thanks for watching. Bye.